All right, thank you for getting started with this class, How to Profit from Stocks Going Down by Short Selling. This should be very helpful if you're a new or somewhat inexperienced trader, so I highly recommend you stay put throughout the entire course to really get the most out of what we talk about within the course. So before getting started, I want to go ahead and just tell you a little bit about myself and briefly tell you about my trading experience and what caused me to actually start these classes. So again, as I already mentioned, my name is Travis Rose. I am a full-time self-taught day trader for the past 5 years, a little bit over 5 years actually. And when I got started trading, I was very stubborn and I kind of wanted to learn everything on my own. Didn't really want to take anyone's classes or courses. I didn't join any chat rooms. I wasn't a part of any trading groups. I really just wanted to learn everything on my own. And because of that, I actually ended up learning everything, quote unquote, the hard way. The hard way, of course, being by taking unnecessary losses that I could have very easily avoided had I just followed in the footsteps of somebody that was already profiting and successful as a trader. So when I did find profitability and I started to understand the market, I decided that I wanted to create these classes to hopefully help new traders avoid the same mistakes that I made when I first started, and again, hopefully help traders reach profitability in a much shorter amount of time than it took for me. So really that's what led me to teach here. I wanted to help others and I wanted to do so more importantly at a very affordable cost because if you look for other trading courses or classes, a lot of times they can be hundreds, if not even thousands of dollars, which for most new traders and investors is far out of their budget. So that's why I'm very happy to be posting these classes here at a very affordable cost. But anyway, that's enough about me. So let's go ahead and get started with the actual class itself and dive into what are stocks. Okay, so as I mentioned, this is a beginner-friendly class, and I want to start with the very basics. So if you already have some experience or knowledge of how the market works, and general questions such as what are stocks, then of course you can feel free to jump ahead a little bit further into the class to talk more about how you can actually profit from stocks going down and get into the more strategic side of short selling stocks. But for everyone else, let's go ahead and cover what are stocks. A stock is essentially a share in the ownership of a company, representing a claim in the company's earnings and assets. Now, for the purpose of this course, there are going to be three main stocks that we talk about, and this is going to be a little bit more important once we actually get into the short selling talk and we talk a little bit more about how we can actually profit from stocks going down. But I do want to cover what the three main stocks are. So, first and foremost, we have what are known as small cap stocks. And these are going to be shares of companies worth between 300 million and $2 billion. And really, all that is the market capitalization, often referred to just as the market cap of a stock. And you can find that just by going on to any stock and looking at the information of the stock, and it's going to tell you what the market cap is for that company. So if the company again is worth between 300 million and $2 billion, that's going to be a small cap stock. Mid-cap stocks are shares of a company worth between $2 billion and $10 billion. So again, if you're doing some research on a company and on some stocks, and you go into the stock's company information and see that it's worth $5 billion, for example, you know that that is what is known as a mid-cap stock. And then of course, large cap stocks are going to be shares of a company worth $10 billion or more. So generally, these are going to be companies that are much more well known and are probably going to be more reliable companies in general. So if you're thinking of something like Apple or Amazon or even Facebook or Google, those are obviously very big and well known companies, and the stocks of those companies are going to be known as large cap stocks. Now, the reason this is going to be important down the road when we talk more about short selling is because if you think about it, large cap stocks are going to be much more difficult to short sell because the underlying company that that stock is representing is going to be much more reliable and well known. So if you have a company, for example, that is making $5 billion a year in revenue and they have 20% profitability, the stock of that company is much more likely to go up than if we compare that to a small cap stock that is making maybe $20 million in revenue per year and their operations are not yet even profitable. Now, at the same time, that's not to say that there's not going to be any large cap stocks that we want to short sell, but generally speaking, because we are looking for stocks to go down, it's actually going to work in our favor for the companies of the stocks to be less reputable and less well known, like we would typically see with small cap and even mid cap stocks.